Hello, everyone. My name is Simeon Okodua. I'm a partner in Alliance Law Firm. On behalf of the Board of Partners, Alliance Law Firm, and Team Alliance, it's my pleasure to warmly welcome you to the first edition of Alliance Law Firm's digital dialogue series, titled Critical Assessment of the Nigerian Government's Tax Fiscal Palliatives to Ease the Burdens of COVID-19 on businesses. For many, taxation will always remain a very taxing subject. Indeed, an anonymous person once said, the best things in life are free, but sooner or later, the government will find a way to tax them. It's my hope that at the end of this session, you may find the subject somewhat less troubling. Now, as the world grapples with the adverse effects of COVID-19 pandemic, several governments across the globe have introduced fiscal, economic stimulus, and palliative measures to stabilize their economies and provide support for their business communities. Nigeria is no exception. Examples include those announced by the Central Bank of Nigeria, the Securities and Exchange Commission, and under the Emergency Economic Stimulus Bill of 2020. On the tax side, the federal government, through its agency, the Federal Inland Revenue Service, recently rolled out fiscal palliatives to help taxpayers and businesses cushion the effects of COVID-19 and hopefully facilitate business continuity. These palliatives have drawn mixed reactions from within Nigeria and abroad. Has government done well or not? What side of the divide are you on? To help us do justice to this topic today, we have assembled, even if we do say so ourselves, a top-notch team spanning the entire spectrum of the tax industry. First up is Mrs. Funke Oladoke. Funke is a partner in the Tax and Regulatory Services Division of Deloitte and Touche, Nigeria. She is a fellow of both the Institute of Chartered Accountants of Nigeria and the Chartered Institute of Taxation of Nigeria. Funke is a thought leader in the tax space. Funke, we're excited to have you join us. Funke, I want to say hi to attendees.
So good day to everybody. It's a pleasure to be part of this discussion, and I hope we are able to have a very useful conversation. And thank you for inviting me to be here.
We're glad to have you here, Funke. Welcome. Next up is Professor Josephat Oumeri, who is an economist and a banking and finance expert. He is a professor of banking and finance and economic development at the University of Nigeria, Enugu campus. He is currently the director, University of Nigeria Business School. A very warm welcome to you, Prof.
Yeah, you're welcome, my brother. Welcome all of you to the forum.
Representing the regulatory space, we also have with us today Mr. Femi Oluwani, Coordinating Director, Tax Operations Group of the Federal Inland Revenue Service. Femi has worked at top management level in the tax space for a number of years and brings on board loads of experience. Femi, we're extremely pleased to have you here.
Thank you, Simon, and all my colleagues, the panelists, and everyone out there. I hope we have a very wonderful conversation, as Funke said earlier. Thank you so much.
Nice to have you here, Femi. Last but by no means the least is Dr. Jude Odintonibo, a partner in Alliance Law Firm and our in-house tax guru who heads the firm's tax and transfer pricing practice. Jude, this is really your show. So please join me in welcoming our panelists once again.
Thank you. I welcome everyone, the panelists and also the participants to this webinar. Thank you, everyone.
Also, we want to welcome very specially all attendees, wherever you are in the world. We appreciate your taking time out to join in on our conversation. Now, quickly to some housekeeping matters. There will be a Q&A session after all panelists have taken a bite. If you have any questions, please ask them using the Q&A option in your Zoom app. We also ask that you kindly direct your questions to a specific panelist so that they can answer your question directly. But if you miss anything, don't worry about it. We've got you covered because you can have access to materials as well as audio and video recordings of this webinar by simply sending an email to info@alliancelf.com. info@alliancelf.com. You will then receive the materials as soon as they are available. There's a feedback survey that will pop up on your device at the end of this webinar. We would like to hear your thoughts on how the webinar went. Now, let's get our teeth into the business of the day. Prof, I'll come to you first. Perhaps a good place to kickstart this conversation is to examine the concept of monetary and fiscal policy. Of course, with emphasis on taxation and how governments across the globe deploy it as an economic tool to achieve various objectives within the economy. Prof, the floor is yours.
Yes, you're welcome. All actually, fiscal policy is a tool, or if you like, call it a policy adopted by governments for the purpose of readjusting their revenue levels or profiles, as well as their expenditure patterns within the concept of certain objectives they would like to realize. Basically, fiscal policies are pursued by governments for the purpose of ensuring or achieving some economic and social goals. For fiscal policy, the government uses it as a tool to generate revenues and also as a tool to spend within certain desired areas. As a tool, it has so many aspects for generating revenues. One, it uses taxation. Another one is that government can borrow, government borrows. For taxation, there are very many types of variants of taxation. There is the personal income tax, there's the company tax, you have the property tax, etc. Government also borrows. As government borrows, government does this for the purpose of increasing its revenue profile. It could be domestic borrowing, it could be external borrowing. Government also at times gets grants from organizations, institutions, as well as gifts. On the expenditure side, government does two types of spending. There is actually a third one. The first, it does through what is called recurrent expenditure. Another one through capital expenditure. And then in doing this, it employs the instrumentality of budgets. So a budget has two arms. One is the recurrent expenditure arm, and another one is the capital expenditure arm within the context of spending. But within the context of revenue generation, I've already highlighted the kind of revenue sources it has. In Nigeria, there are two major revenue sources. These are from oil and related matters, as well as non-oil areas. For Nigeria as a country, the dependence on oil is so high. The oil sector is so high for much of its revenues. To the extent that we generate more than 80% of our earnings from oil, it's more or less a monocultural economy. And then when government embarks or uses monetary policy, it has a twin, I will call it a twin brother, monetary policy, but we are focusing on fiscal policy today. It uses it to achieve some major objectives. One is that it aims to ensure that there is full employment of resources, which is a very noble and very high ambition. Full employment of resources, very high one. And then it also goes to ensure there is economic stability, there is growth in the economy, economic growth, and of course to ensure external balance. So the critical area there is that over time, government has used fiscal policy to intervene in the economy in times of crisis. Economies go through some levels of activity, and these levels of activity would involve at times expansion, at times decline, at times rise, stagnation, and fall. So it could snowball into economic prosperity. It could also snowball into economic decline, getting to depression, recession, and the rest of them, depending on which one it falls into. So over time, even starting from the time of the great economic scares, fiscal policy has been used to intervene during times of crisis. Crises arise in economies because of certain risks that are difficult to manage. For instance, right now, the whole world is in a global recession, and is as a result of a risk that is beyond even human beings to really manage. At least at the moment, we are trying to manage, but the solution is still not there. Those sub-countries are saying they have found a solution, and some others are looking inwards, all that. But the important thing is that risk, because everything is about managing risks. And when some risks are overwhelming, it could bring down an economy. If you can manage your risks well, your economy grows. So with the pandemic in Nigeria, the government has come up with certain policies in order to manage it. Like I said, countries had used fiscal policy instruments to try to mitigate or even to embark on expansionary policies, so processes of expansion. For instance, the American economy in 2009 enacted what was called the American Recovery and Reinvestment Act, which was a fiscal policy act that involved tax costs. It also involved transfer of funds to individuals and states. And also during that time, government purchased a lot of things up to 5% of its GDP. Up to 5%, up to the level of 5% of its GDP. Of course, when government is purchasing, it means it's transferring money to people, and then the purchasing power of individuals will be high. They will be purchasing things they can buy, and with that, there is reinvestment. Companies, organizations are making sales, and they are earning incomes. They are investing. The economy is booming. So these are interventionist policies adopted. Now that we have the coronavirus pandemic and is affecting Nigeria like any other country, the government has come up with certain palliatives, has adopted tax as one of the instruments to ensure that the economy comes back. There's a rebound in the economy. Taking some decisions, lock down the economy, gradual reopening. But then the question is, how far? Yes, the revenues are being generated. And we are saying that with fiscal policy, government spends. With fiscal policy, government can use instruments such as taxation in order to stimulate certain activities. So now that the Nigerian government has come up with such a policy involving different phases. Even the central bank is involved because it has its own phases, which we have three phases on its own: immediate, medium term, and of course, another, all these terms are there. But the important thing is that we are looking at the human being, the health of the human being vis-a-vis the economy. Without human beings, there will be no economy. That is basic. Without human beings too, all other resources will lie idle. That is the truth. So Nigeria is facing, one, the problem of dwindling revenues. And then another one is the problem of stimulating businesses so that the economy can grow. We are looking at the health of the individual. You're also looking at the health of the economy, because the health of the economy is anchored on the health of the individual. So it's a kind of paradox. And as we spend, we also look at the nature of our economy. Our economy is a monocultural one, where, like I earlier pointed out, we depend on oil. Now, this coronavirus pandemic, can it be to the advantage of the Nigerian economy, in as much as we know that right now is affecting it very negatively? So what can we do? The funds being generated, are there leakages associated with them? Because when you generate revenues for certain activities, for the palliatives, are we sure those revenues are there? Have we done any assessment of how those revenues are spent and that they are still there? Also, what can we do to the informal sector? Because when we say we are gradually easing the lockdown, we are also using tax as an instrument. Those companies that have threshold of 25 million are exempted from tax. What of those that have even that threshold, but they are not limited liability companies or companies? Apart from that, we also look at right now, what can we do to diversify the economy in such a way that we look really inwards, look beyond even agriculture? Because as far as I'm concerned, the difference between a highly developed country and a developing one has so many facets. And the major critical facet there is that for developed countries, and looking at one point now, their manufacturing sectors are very, very strong. And then because they are engaged in manufacturing, the technology is associated with manufacturing. They have highly advanced technologies. They can do much. But in terms of, because of it, they can depend on the economies. In other words, many of them have self-reliant economies that are self-sustaining, as opposed to ours that is highly dependent on the advanced economies. So how can we look inwards? Even the pharmaceutical industry, the medical areas, which everybody is focusing on now, how are we looking into? Yes, we've granted them the VAT-free medical products, VAT-free, foods and others, they're exempted from VAT. But how can we look inwards now that we have the opportunity? Okay, also right now, we have noticed that many Nigerians have, I can say, hearts of gold. Many organizations, they can donate to assist the Nigerians that are less privileged economically. If people can donate to government, the question is, can we use this opportunity to create a social safety network through which we can transfer funds to the less privileged into their accounts? And can we also develop a social structure, entrench a social structure now that will exist now and in the future, such that those people who are economically disadvantaged, the unemployed, those who are physically challenged but don't have much doing, and then the youths and others, such that they get some kinds of social benefits from the country. Can this be done? Can this be an opportunity in disguise? Or are we just going to gerrymander this time around? At the end of the exercise, everything comes to ground zero and we start afresh. So fiscal policy is a good tool if properly utilized. If it's properly utilized, it has helped economies come out of recession, depression, and the rest of them. But where not well utilized, where the activities are laden with corruption and leakages, and these leakages cannot be plugged and the risk cannot be mitigated, then there is a conundrum in the process. Thank you.
Thank you so very much, Prof. Prof has laid down the markers and set the tone. Jude, I'll come to you next. Please talk us through how the federal government has intervened through taxation and other fiscal measures to mitigate the hardships that the current pandemic has foisted on Nigerians. In your view, are they fit for purpose? Or are there areas that you think have not been adequately addressed? Dr. Jude, the floor is yours.
Yeah, thank you. I think I will start by first looking at the palliatives or the programs that the federal government has come up with to tackle the issues of COVID-19 in order to help businesses. First, though, the Finance Act was enacted towards the end of 2019. But I would say that the National Assembly or the federal government was a bit prophetic. Prophetic in the sense that the tax rate for companies have been divided into 3 groups in a graduated form. Prior to this, the Company Income Tax Act under Section 40 actually had a flat rate of 30% for all companies, regardless of whether the company is a small company or a big company. You have to pay 30% of your taxable profit. But with the Finance Act, companies earning anything 25 million naira down to whatever amount or less than that will not have to pay any tax. That means that this was before the outbreak of COVID-19. That means that companies earning 25 million down do not have to worry themselves about the tax they're going to pay. Now, the next stage is companies, the medium-sized companies that earn up to from 25 million to 100 million, they're paying 20%. Then the large companies earning 100 million upwards are paying 30%. This was prior to the outbreak of COVID-19 that the Finance Act came up, the National Assembly, with the aid of the federal government, came up with this. So we could say that the federal government and also the National Assembly was prophetic in the enactment of the Finance Act. Now, with this COVID-19, a lot of taxpayers are finding it difficult to meet up with their tax obligations. And in order to help these people, individuals, and also companies to meet up, give them time in order to meet up with their tax obligations, FIRS, for instance, came up with a 1-month extension for filing of companies' income tax returns. 1 month. Traditionally, companies are expected to file their company income tax returns 6 months at the end of the accounting year period. Most companies have 31st of January, that is, the accounting period runs from 1st of January to 31st of December at the accounting period. So you have 6 months thereafter, ordinarily, to file your company income tax as a company. That means that every company is expected to file its company income tax on or before 31st of June. But with this 1 month extension, this has been extended to 31st of July of 2020. So, but for newly incorporated companies, ordinarily they have 18 months from the time of incorporation or 6 months at the end of accounting year period, whichever is later. Of course, you know that companies have the right to choose each accounting year period. You could decide to choose any month. This is one. Another one is VAT returns. All the agents collecting VATs, of course, VAT is a federal tax collectible by the FIRS. So those people collecting that ordinarily file their returns within on or before 31st of every month. Now, FIRS has given them additional 1 week, extending it to the last working day of each month. Then another one anyway, FRS had always had this online submission of tax returns. So with online submission of tax returns, companies or individuals who file tax within the FRS. Of course, FRS, if you are a foreigner, non-Nigerian resident, if you're not resident of Nigeria, FRS collects tax from you, members of the police force, armed forces. FRS used to collect from the resident of FCT up until when the Federal Capital Territory Inland Revenue Service Act 2015 was enacted and the FCT IRS was created. So those ones, for the VAT, for the online submission, you can now use the portal, use the e-portal of FRS to file your income tax. Another one is the extension of filing period for financial institutions under the automatic exchange of information or common reporting standard. This automatic exchange of information, common reporting standard, is actually an idea of OECD. OECD came up with this. The members of OECD, although Nigeria is not a member of OECD, but one of the affiliates, like we participate with what OECD is doing. OECD, I'm aware that they visited Nigeria and helped Nigeria to log into this, the automatic exchange of information for common reporting standard. The essence of requiring financial institutions to file this is to ensure that transactions, especially those people who are involved in cross-border transactions, are monitored. You can't hide your income. So if the banks report activities, automatic exchanging this information with FRS is free to share this financial information with other tax authorities in other countries. That way, people could be monitored globally to know when they're hiding income, and also companies that are involved that have other subsidiaries in other countries are also monitored. That's the essence of this automatic exchange of information for common reporting standard. Now, normally, the period you normally file your income tax on the last day, 31st of June. FRS has extended this to the last date of September to help financial institutions to be able to meet up these tax obligations. Now, for states, even though you restricted this to FRS, but do you know that some states, like Lagos State, Lagos granted 2 months extension for filing of income tax because individuals file income tax in the states where they reside. So if you reside in Lagos State, you file your income tax to Lagos State Inland Revenue Service. So Lagos granted 2 months extension starting from the 31st of March. 31st of March ordinarily is the deadline. 90 days from the end of the year. The commencement of the new day, 90 days from that, you're supposed to file your income tax, do your personal self-assessment. So with this 2 months added, now it has been extended to 31st of May, but by the end of 31st of May 2020, the question is whether by the 31st of May, whether the problems of COVID-19, whether it has ended or whether Lagos State government will be able to extend it further. The same thing with Edo State. Edo State granted only 1 month extension, which expired on the 30th of April 2020. The FCT IRS extended its own deadline by 3 months. So in any case, on the 30th of June, individuals living who reside in the FCT, they are expected to file their tax returns. Now, we have to look at the Emergency Stimulus Bill 2020, which was passed, I think, on 24th of March by the House of Representatives. It is not yet a law. I'm not aware that the Senate has passed it, and I'm not aware that they are sent to it. However, we will look at the major 3 prongs of this law. The 3 things it tries to achieve. One is to start pension tax rebate to employers, to ensure that employers do not retrench their employees. The next one is deferral of residential mortgage obligations by those who contribute to towards the National Housing Funds or the Federal Mortgage Bank, and also import duty waiver on selected goods, medical items. So for the first one, the staff retention rebate says that in order to encourage employers to retain their employees, that they will be granted 50% of the taxable income, the personal income tax payable by individuals who they retain. As long as they don't retrench these people or the staff from the from the 1st of March till the end of December, 31st of December, you'll be entitled, you can claim this rebate. And it is going to be 50% of the personal income tax payable by these individuals. But the question, okay, well, there are conditions for having this. One, the first condition, you don't have to fire your employees from 31st of March from the 1st of March to 31st of December. You must be a registered company under CAMA. Well, once you say registered company under CAMA, it is very obvious that this must be a company registered under Part A, companies doing business. It is not clear whether or not companies registered under Part B, business name, will participate on this. We're going to look at it. Now, petroleum companies taxable under Petroleum Profit Tax Act, those companies that are involved in the upstream sector, whether they are not covered, it is expressly stated there. Now, the first question is, how come the National Assembly is tying the rebate to personal income tax payable by individuals? Companies or employers of labor do not pay personal income tax. Rather, they are only withholding agents that can withhold a certain percentage of the employee's income and then remit it back to the tax authorities. That's what they do. They don't pay the tax themselves. And in fact, there are case laws that say that companies, you can't sue on behalf of your employees. The employees are the people who pay the tax. So how do you tie this to the rebate to tax payable by employees? That is a question that needs to be answered. Perhaps, maybe, if the members of the National Assembly is listening, because it hasn't become law yet, the Senate is still pending before the Senate. So maybe they could say, okay, that they should give 50% of the tax as a credit, tax credit. Tax credit is like is naira for naira. If you are giving maybe 10 naira tax credit, you get 10 naira. That is different from, let's say, I'm giving you 10 naira deductions. The deduction, you deduct it from your income tax you're supposed to pay, the taxable income, then it only reduce the amount. Then before the rate at which you are being taxed will be used to match. So you may get less than the amount that allows for deduction. But when you're giving a tax credit, you get exactly the amount. So if you say, let's give 50% tax credit, 50% of the amount that this individual ordinarily could have paid to either the state or federal government as a tax credit. In any case, the company, after they had calculated their income tax, will now, before it being taxed, have to have this very amount deducted from the taxable amount. To that extent, you are putting money at the pocket of the company directly. So now, the leaving out petroleum profits, those companies taxable under petroleum profit tax, is a problem. It's a problem because these are companies that are in business. Right now, one of the major problems, of course, we're a mono economy. All the companies involved in oil exploration are in trouble. The price of crude oil has fallen drastically. So they need to be taken into consideration. They shouldn't have been left out at all. So I will later come back to this if we have time. Now you go to deferral of residential mortgage obligations. There are people, especially federal workers, that contribute to the National Housing Fund. You have a mortgage you are paying and you have a house. Now that has been deferred. That it has been deferred. I think it's 180 days. That is about 6 months. That you don't have to contribute anything. You don't have to pay the repayment, either the repaying the principal or paying interest or anything, so as to have money you can use to solve your problem. But if you have the money to pay that, you should pay that. The extension does not mean that it has been forgiven. You will eventually pay that. So if you have the money to pay it now, you can pay it. If you don't have money to pay it, you hold on. Nobody's going to help the person. You will not pay any penalty for that. The next one is the import duty waiver. Import duty has been waived for all the medical goods or medical equipment or drugs that are being imported that is going to be used to fight COVID-19. And the minister is given the power under this bill to extend it to other goods he considers that they will help in fighting COVID-19. The president as well can extend it beyond. It will last from now till 31st of December. And the president can extend it. So that is it. Now we look at other reliefs by the federal government. One of them is the augmentation of state allocation. The federal government has withdrawn 150 million from the Sovereign Wealth Fund, managed by the Sovereign Nigerian Investment Authority, $150 million, to use it to support the Federal Account Allocation Committee, FAC. Because all the state government, there are a lot of state governments in Nigeria that are not viable. And that's why some people are saying, why creating more states? You have states that can't pay salaries. They're waiting for the federal government to give them allocations in order to pay salaries. Apart from Lagos state government, I don't know any other government in Nigeria that will be able to maintain its, pay its employees. These states are employers of labor. So this money was withdrawn to support the fact, because already we have lost a lot right now in oil revenue. So that's the federal government. Then on moratorium on state debts. For the states that are owing money to the federal government or the CBN, right now there's a moratorium that they have to hold on. You don't have to pay the principal or pay debt or penalties to help the state government have money to meet its other obligations, because very soon most states may find it difficult paying their employees. Now, looking at the amendment of the 2020 Appropriation Act. The 2020 Appropriation Act, we all know that the government is scaling down a lot of things. You know, there's a review. The barrel of oil was, peaked at $57 per dollar. Now it has been reviewed downwards to $25 per dollar. And also, the projected 2.1 million barrels per day has been reduced to 1.9 million barrels per day. So, and also there's an insertion of 500 billion naira COVID-19 Crisis Intervention Fund that will be used to upgrade our health care. Remember that this has not been passed into law yet. It hasn't been passed into law. So the National Assembly will look into it. When I have time, I believe maybe Funke or any other person that will be looking at this, America has enacted the CARES Act, that is the COVID-19 Aid, Relief, and Economic Security Act. It is a very huge document that covered a lot of things, even transfer funds to individuals, helping all aspects of economy. I say we're actually covered by the Americans in the CARES Act. I believe that this economic stimulus bill is aimed, towards exactly what the CARES Act is in the US. I believe the National Assembly, the Senate, or the National Assembly, House of Representatives, they should get the CARES Act and look at the areas covered. We know we're not as rich as America, but we should be able to touch other aspects of economy than people. Now, CBN has its own measure, the Central Bank of Nigeria. There is this extension of moratorium. CBN has a lot of credit facilities, especially for those in agriculture. The extended moratorium for now, that they don't have to bother with payment of repayment of principal and also interest. And also, the CBN came up with 100 million naira. There's 100 million naira variable for healthcare. Nobody knows how this is being administered. Anyway, I think the Prof talked about the issue of administration. That is an area that the government should look into. And also, the CBN has reduced its interest rate on all the intervention programs it has from 9% to 5%. So people will no longer pay 9%, but 5%. And also, there is this 50 billion naira credit facility in support of poor households, small scale and medium sized enterprises. So, but if I may add, tax is not just to tax people. Tax is used to put money into the pockets of individuals and to solve societal problems. For instance, some people that file income tax in Canada are people who don't earn anything. It is just for government to know that these people are poor. Every quarter, government will send them paychecks. With that, government will know who is qualified for housing aid. If you are paying, let's say, $3,000 for 3-bedroom flats, somebody who is very poor, that which is very obvious from his tax returns, could be there free or paying only $50. That's the essence of it. So most people, I think the report says that about 70% of those who file income tax in Canada are not actually taxable. Now, you come back to Nigeria. Our law here, if you look at the Income Tax Act, the Personal Income Tax Act, there's a minimum income, there's a minimum tax payable, which is 0.5%. Where in the world do you have that kind of thing? It's still part of our law. It hasn't been removed. Even though, well, fortunately, unfortunately, that these things are not enforced, how do you expect somebody who hasn't earned anything or don't have enough to pay 0.5% of whatever he has? We have to remove that. The issue of transferring money to the low-income earners, poor people, to elevate them, to take them out of poverty. Nobody is talking about that in this country. And also, these are the things we should consider. Now, treatment of loss. I'm trying to round up. Treatment of loss is one way of putting money into the pocket of businesses. In Nigeria, we recognize loss carry forward. Yes, but what about loss carry backward? Loss carry backward is not applicable in Nigeria, but in some other clime, it's applicable. Now, in this COVID-19 period, if, for instance, for those who have filed income tax in the last 3 years, you said, okay, I'm giving you loss carry backward for 3 or 5 years. Now, you check the income tax you filed previously, and now use the percentage to take, that means government is going to put more money in your pocket. You use it to revive these businesses. Now, for loss carry forward that we apply here, we don't cross the line of business. So if you have tomato business and mango business,
you have an opportunity to round up, make closing remarks after other panelists have had a bite.
Okay, thank you.
We're enjoying you so much. We got carried away for a while. I forgot that we were the panelists. So thank you very much for your contribution. Dr. June has enumerated the fiscal and monetary policy interventions that the federal government has initiated, and has expressed an opinion, and a very strong one at that, on their fitness for purpose. Okay, I'll come to you next. I'd like you to share your thoughts on how countries across the globe, especially our sister African nations and some of the more industrialized economies in Europe and America, how are they faring in comparison to us in terms of instituting emergency economic stimulus packages, for example, and other measures to address the varying disruptions to economic activities? Please, let us have your thoughts on this.
Okay, thank you, everybody. Good afternoon once again. Good day once again. It's a pleasure to be on the call. Listening to Dr. Jude, I was actually impressed. He was so persuasive.
So passionate.
With the comments he expressed. Yes, very passionate. So I mean, they are all valid. And I think where I would like to start is that we are in a very, very unique situation, right? And when I speak to some of the senior citizens to ask them, have you ever witnessed such a situation before? And there has always been no, not to this extent, right? And so we are in a situation where the right words that we should be using now is survival. Survival as an individual or as a business, right? That's why if you look at what has happened, possible, see how either individual or companies can survive. So some of the things that they've actually rolled out, there are things that can support individuals or they can support businesses and make sure that they don't collapse. Right? And in any event, if some of them, if there's retrenchment or laying off or whatever it is, they also have some structures in place that you can even compensate some of these unemployed individuals. Now, realistically, we cannot, as a nation, benchmark ourselves to those advanced countries. And that's why we call them advanced countries, right? Because they have money. I mean, Doctor was talking about the current, we're talking about millions and millions of US dollars that needs to be pumped into the economy to support businesses and to pay individuals. How are we going to get that in Nigeria? We simply don't have it. Now, we are in a situation where we're saying, if we don't go back to our investment portfolio and take money out and give to government, state government, they might not be able to survive beyond 3 or 4 months. We are in a situation where the federal allocation is not enough to go down states. Okay, so at that point in time, anything that suggests that we will get money in so large amount, I'm not sure how effective it can be. So much of the fact that quite a significant number of people in the country are in the informal sector. And that's why you will see that some of the challenges that we've had in paying stipends, when this whole pandemic started, the federal government wanted to pay people money, just give them stipend, they can survive. It's been quite challenging because a lot of them that go around, they are not in a formal system. Somebody was talking about filing of returns. You file returns not because you want to pay tax in advance, but you file returns because you want people to know that you are here. So the day you are not, see, the pandemic happens this, you get an email from the mortgage financier to tell you that, look, we are delaying your payment of mortgage. And so for me, I think when we want to look at it, it's better for us to compare and see what are they doing in countries that are similar or have similar economies like Nigeria. For me, I think the best, when you talk about how large the Nigerian economy is, we tend to compare ourselves with South Africa. And for me, so I think that maybe we'll probably look at what is happening in South Africa. And like I said, we are in a survival mode. So much of the fact that everybody is talking about pandemic, we don't even know when they are going to find a cure. We don't even know when the vaccines are going to be tested on human beings. We don't even know, nobody can reliably go out and tell us this thing is going to end by so date. So we are in a very, very precarious situation. And so most of the things that they put in place in South Africa is how they can make businesses have cash flow. They can support their cash flow because you need money, right? You need money to survive. You need money to pay wages, right? So this is not a time where you go on an esoteric project, you're not even sure when return is going to come. And so one of the things that they've done in South Africa is to fast track VAT reforms. So they also have a system which is similar to Nigeria, where they refund VAT, right? And so what they've done is that they've told businesses, you put in your application, we will fast track it. And the whole essence of fast tracking it is, in a sense, giving back to the business in terms of giving them money. Let them have access to funds which they can use to, to manage their operation. So that is one thing I know they've done. And another thing they've done is to say that, look, for pension, because their pension is classified in different tiers. They are saying, as something similar to what you have in Nigeria, that if you need to withdraw from a particular tier of your pension savings, we will not tax you. Because the truth is that people are going to lose their jobs, right? And not because businesses not because they want to lose their job, but because the businesses cannot cope anymore. So we have a pension system. They have a pension system similar to ours, where it's compulsory that you must contribute towards it. They're saying that, look, if you take out of the money that you have saved, we will not pay you tax. You can see the logic in that, because if what you are trying to do is to ease the burden of the pandemic on my affairs, then why are you going to tax again? So they've also done that. And they've also done something similar to what we have, I think is the bill that we proposed before the National Assembly, which is that they've removed import duty from some categories of products. For instance, medical, and many other, some basic things that people need to use to survive. They've removed import duties, which is also commendable. They've also done something similar to what we already also have in Nigeria, which is the fact that interest on tax liability, they are looking at ways for which they can either waive it or at least to reduce it. Because again, that is a group of saving. Because you're telling me essentially that if I'm owing 100 rands, right, I'm going to pay penalty and interest of 40 rands on that. That takes it to 140. And you're telling me if you can pay 100, I will discharge the liability. It tells me a lot, because the other 40 rands, I can use it to do so many other things. So so they did that, and then, and of course, you know, as we also have similar in Nigeria, the donations that people are making, because a lot of people are coming forward. They are coming to donate because you can't leave the government to this alone. People are also saying, I mean, government is also saying, don't worry, just like have something similar in Nigeria where people have come forward. You've seen all the initiatives on TV, social media, where people are coming together just to rally around government, to just let them, all hands be on deck. They're saying if you donate, you will have some form of exemption over that, which is also very good. So they've had, I mean, those things that really speaks to either the business or the individual, because in the end, like I said, they also need to survive. And if I can just quickly go to Ghana, because I mean, when it comes to operation, I mean, I've looked at the economy. You tend to compare, oh, Nigeria, South Africa, big economy, which one is bigger? But in terms of operation, people tend to back and say, oh, Ghana, because Ghana too has a very similar, you know, economy like ours. One of the things they've done is that they've extended the period of filing returns to 2 months, and I think they may have to extend it further, because nobody knew that it was going to take so long when the whole pandemic started. Another thing they've done is also to waive penalties and interest on outstanding tax liabilities, of course, with a card. I think for Nigeria, you have to pay by end of May, but for theirs, I think you have to pay by end of June. So once you are paying before the end of June or before end of June, you have waiver of penalty and interest. And again, they also said for some companies, they can't give out cash, but they can give out kind, right? They can give things in kind. So they can donate PPE, they can donate masks, they can donate food. I mean, if you're in a food business and you decide you want to give, you know, packaged food out or whatever it is, they are saying, look, you don't need to pay VAT, you know, because there's always this conversation about, is there vatable supplies, you know, when tax authority comes and they start looking at your turn and saying, where is the VAT? But they're saying, clearly, because I'm going to see it as your own contribution to what is happening in the economy. And then, of course, the similar to what we have in South Africa, they're also looking at your withdrawal from pension to say that, look, if you find yourself in a situation where the employer has said you should leave because they can't pay you, you can actually withdraw from it, even though, like for instance, we have voluntary contribution. Maybe you have been contributing voluntarily and there are restrictions on where you can withdraw from it, but they're saying, look, if you take out money, because you really need to survive, right? So they are waiving. And then, of course, there's some, you know, I've spoken about the donation and some of the, and then for annual filing, they've also launched the e-filing where you can actually file returns. You don't have to go to the tax office. You know, you don't have to physically hand over some returns and as it goes. I think for me, when I look at some of these things, they are quite similar, and I can assure you, in some other countries, whether francophone or anglophone, they are similar, and which speaks to the fact that I think the government is consulting, but I think, like Dr. Jude said, they can do more. But you also appreciate the fact that even in advanced countries, right, they've had challenges. There's been a lot of criticism on the way they've handled it. There's a lot of criticism on what should be and should not be. The truth is that Nigeria is a monocultural economy, like Prof has mentioned. We have more than 80% of our earnings come from oil. About a month ago, for some of us that are quite conversant with this, we were at a situation where the price of barrel of oil was $0. I think, I mean, we were in that kind of situation. When we started this year, we said we could produce 2.1 million barrels of oil. We said, oh, the price is going to be $57. Today, we are reversing all these ones because it can't work, right? We are even going out to get loans. We are happy that we are having repatriation of cash trapped out of the country. So as much as possible, it's a step in the right direction. They can do more. We can engage them, right? So I think at this point in time, there's so many things that I think we can improve on, right? But I don't think it is a time that we bring everything on board and we begin to change. You can't change the economy from a cultural economy to an agricultural economy, a diversified economy in just one day. It's not going to be possible. So I think as because they are also engaging with the stakeholders, we see some big names, people that we know have been very, very successful in handling of businesses, in running businesses, that are collaborating with government. So I believe that as time goes on, additional measures will be announced. But as it is in Africa, I think what we are doing is comparable. I think if there's anything that they're doing in other countries that perhaps we are not currently doing now, maybe because we are not aware of it, or maybe we are really, but the truth is that you don't have the means of executing it. We are here today. We're saying pay people stipends. How do you get the money to get? How many people are you going to pay? So those are the questions that, I know that as this thing unfolds, we're going to have, people are going to look at what we have on ground. The Senate, I think everybody is just bringing in ideas. I think some of them will also be revised to at least meet up with what is happening in other countries. Thank you.
Thank you very much, Funke. I hear you. Government has done well so far, but there's always room for improvement. Against that backdrop, the practitioners have spoken now. Femi, will come to you next. Please share with us what were the critical policy considerations that motivated the nature and scope of the federal government's fiscal and monetary policy intervention regarding COVID-19, and how do you gauge the response of the economy and practitioners to this intervention so far?
Thank you, Simeon. I've actually been enjoying the conversation so far, and I guess in the course of the position going around, a lot of what I would have to put forward, one way or the other, have been advanced by those who spoke earlier. Jude was so passionate, particularly about the measures so far, and he's probably feeling that Nigeria has not done far enough. So he has reeled out the palliatives, which actually FIRS, as let me say the tax authorities generally, have rolled out. The federal government through the Ministry of Finance and the Central Bank of Nigeria. Whether they are far-fetched, and I think I also like the balancing act that Funke did in terms of insisting that we are a peculiar people, we are still developing, and it's just one day that we should really feel we'll get to the point of the advanced countries. I think personally that we have gone far. We have, in terms of, especially when we compare with our peers, these measures, we have not done badly at all. I also took time to see what happens around us, especially in the region. But having said that, going particularly to your question now, what's the thinking? What was going on in the mind of government and tax authorities before reeling out these measures? A major one that is not far-fetched at all, and I think everybody has alluded to it here, is the issue of supporting businesses to continue in operations. The name of the game now and here is survival, and like I've told some of our customers, it's never the intention of the taxman, for example, to see that you pay tax adequately. In the name of the adequacy of the tax, we close our eyes to the fact that you may die off, and at the end of the day, we have nothing to collect the year to come. that's not in our interest. So there's always a balancing act to do. So this time around, this pandemic has brought immense challenges to businesses, and we just felt the little we can do in terms of helping businesses to be sustained and to ease their cash flow and all of that could just be the saving grace. So we, and I'm sure government too had it at the back of our minds that businesses should continue in operations. And when you see issues like extension of filing dates, issues of coming forward to get restrictions, I mean, discussions around when to pay in terms of installmental arrangements and all of that is just all about trying to help them and to ease their cash flow. Now, another major thought behind the measures is also the safety of our own personnel themselves, safety of everybody, you know, maintaining health standards. For example, there's one of our measures to ease the burden of taxpayers where we say, for now, visits are suspended. Visits in terms of audits, in terms of investigation, and any form of monitoring, so that we can conform to the distancing measures of government. It's not easy to be out there mixing around people and all of that and be mindful of all these measures. So we felt the best thing was to, for now, let's just put the issue of visits ahead. Of course, one other thought, one other intended objective, which maybe particularly not from a tax point of view, but from the government policy point of view, is this issue of jobs protection. And I am sure we have discussed it before now. The economic stimulus bill that the House of Reps is working on or has passed, which has not become law, if you keep your employees to so time, from so time to so time, then you get this kind of a rebate in form of tax. So we don't want people losing their jobs because of this pandemic as much as possible. We want to encourage the businesses to keep the people working out there. And generally, disposable income in the hands of individuals is another thing. This issue of payment to National Housing Fund in terms of mortgages of people is just to help to ease their cash flow at this time, particularly employees and individuals. So generally, these are the objectives and the thoughts around the mind of the government in general and the tax authorities in fashioning out these measures, these palliatives. Now, to another aspect of your question was, what is the response so far? How can we gauge what has been achieved? Have these measures been able to deliver? And I am happy to report to us that, you see, on a general terms, even without looking too deeply, it's not far-fetched that our attitudes as Nigerians now is changing in terms of technology. Everybody is forced to a large extent to change ways of doing things. We don't have to be physically present before we can get across to one another, before we can transact businesses, before we can file our tax returns and so on. We've made our online platforms very robust, very easy. We went to the extent of saying that even you can file your returns through emails, and we are getting a lot of good responses in terms of that. Well, let me say, maybe one negative effect of the measures is that we've for example, said you can file online. I mean, no, we gave times in terms of extensions, in terms of dates of filing. The VAT, I think Jude, Prof, they mentioned all that. VAT shifted to the end of the month. Income tax, you have 1 month extension. But it's like people took it to mean that don't file at all. Don't file at all. We looked at our records in terms of the month of April when there was total lockdown compared to March. And I can tell you that we had about 80% reduction in terms of the filings of people. We didn't expect that. We expect that if there was going to be any reduction at all, it should be minimal. It's just the shift, the time of filing that was supposed to be different. That's just the downside of it. But like I said about the issue of shift towards technology now, that's very encouraging. And another encouraging thing that we are getting is that, you know, we wanted to ease the burden of cash of people. We said penalty and interest have been waived if you pay up till the 31st of May. And it will amaze you the level of response that we got, where this money that you would think was not there at all, people came to say, okay, well, I want to pay my debts and just put it in writing that my penalty and interest are waived. We got a lot of that. We also proactively, some of us out there and even the panelists will remember that there was a time we even came to say those whose businesses are not too negatively impacted upon by this pandemic, talk of the digital industry of this world, talk of financial institutions, come and help us out. Come and pay in advance. It is not the law, but it's just a clarion call to some level of salvation at this time. And I want to tell you that without mentioning names, certain big companies in those industries, they rescued the situation. And I can tell you that the month of April, that's the reference point that we can hold on to specifically now. It was like a total lockdown. The month of April, you will expect, despite that 80% reduction in filing, we looked at our bottom line in April. It was just in the region of what we made the same period last year. It will amaze you. And that's very encouraging. As a matter of fact, during our review for the first quarter of the year, of course, you can argue that the effect had not been so deeply seated, but then March really had some good part of this negative thing. So January to March, our bottom line has never been as good as that. And all these are just a measure of the kind of positive reactions we are getting to the encouragements we gave our customers out there. So generally, these are the things that have been working around for us, and we hope we can just sustain it. And more importantly, we pray that the whole thing will be over very soon, but that the takeaways, the positives, we will not so soon lose them again. Thank you very much, Simon.
Thank you very much for your insightful comments, and thank you for all the information that you have afforded the audience. We'll go straight into Q&A and entertain questions from attendees. Prof, there's a question for you here from one in Sim Ogedi. The question is, are there practical examples of countries who successfully diversified their economy from being reliant on a single source? How long did it take? And how does Nigeria compare with such countries, and what learnings are there? If you could just fit your response into about 3 minutes, we very much appreciate it, Prof.
Okay. Yeah, there are practical examples of countries that diversified their economies. There are actually many, but what happens is that, or what happened in the past had been that some countries had a leading sector in their economies, what I would call a leading sector. A leading sector is that particular sector that was generating most of their incomes, had linkages that affected other sectors of the economy. And then from that leading sector, they would diversify into so many aspects of activities. For instance, in Nigeria, we take oil. For me, I take oil as the leading sector in the Nigerian economy. Many countries had such histories. There are so many of them. Even US, even almost all countries had a leading sector at a time. So there's no need particularizing on any particular country. All countries had a leading sector at a time. Even Nigeria at a time had agriculture as what was their leading sector. But because it was being managed as a result of the emergence of oil, you know, the Nigeria suffered from the so-called Dutch disease, where with oil coming in, every other person became lazy as we were getting cheap money. So the whole thing is that if we could diversify, for instance, even in the oil sector, there are so many activities that could be done. There, if you look at the oil sector, it's not only, let me call it fuel, so that everybody would understand instead of using the, now we have gas, which we are not making use of. We are in fact wasting gas. It's a wasting asset in Nigeria. We have engine oil, so many things that can be done within the petroleum or oil sector. And these things are not being done. And beyond the oil sector, you can have the revenues you are generating. If you focus them, if you plan properly and focus them into the provision of certain things like social infrastructures. Many people are not really waiting for the country to come and build businesses for them. But if you can provide infrastructures for them to thrive, for their businesses to thrive, for them to thrive as individuals, for their businesses to thrive, I think the country will do very well. So there are many countries, there are so many of them. It depends on what was your leading sector at the time and what you made use of that leading sector for the development of your economies. And of course, you know, when we talk of economies, the very important thing is also to look at good governance. For me, the simple definition of good governance is a government that means well, presumably means well for its people. And when you mean well for their people, you want to do things that will keep them in employment, things that will uplift their standards of living, things that will educate them, things that will provide good health, and all those, a lot of social infrastructures. And more importantly, you do not defraud your people. You do not defraud their people. When you steal the money belonging to your people, whether you're an agent of government or you're part of that government, that you are not helping the people. It is bad governance. Once you have good governance, then you think of what will. In fact, it's a heavy paradox that with all the potentials Nigeria has, since 1960, we are still grappling with just one sector. If oil collapses today, the whole sector, the whole economy will go to ground zero. Thank you.
Thank you, Prof. I hope that, Nsima, if you're hearing us, I hope that Bob did justice to your question. We have another question here, and we'll have to move a bit more quickly. From one Mr. Kunle Okunawo. This question is directed at Femi. Femi, this is for you. It says the oil and gas industry has been significantly affected by the advent of COVID-19. This is evident in the global crude oil prices, and major oil companies have already trimmed their budget, suspended various ongoing projects, while prospective projects are cancelled till further notice. Could you please confirm how the Nigerian government, through FIRS, has been able to use the fiscal palliatives to ameliorate the hardship caused on the oil and gas companies by COVID-19? You may equally want to justify the effectiveness of the palliatives. I think you've answered the second part of the question, but you may just take a couple of minutes to address the first part of the question.
Thank you. That's I appreciate that question, and it's very interesting, especially coming from the heels of certain responses we got earlier that the palliatives we rolled out, generally, that there was no specific mention of the oil industry. Take, for example, we're talking of filing of VAT from 21st shifted to the end of the month. We spoke of personal income tax to June, just like FCTIRS has done. And then we mentioned income tax filing by a month. So we've been inundated with questions about what is in there for the oil, for PPT, to say in the specific. And we have had cause to just get it across to people that what we actually meant by the 1 month extension in filing for the income tax, maybe it was inadvertent. PPT or petroleum profit returns was actually had in mind. Ordinarily, they file their final, what is called final returns, in May, and I cannot authoritatively pronounce that they are here. They have been allowed to shift their filing also to, in the same vein, to 30th of June instead of the normal 31st of May. So majorly that is what we have done as a tax authority to try and also help the upstream sector of the oil industry in general terms. But talking in terms of some other specifics, I guess that may be beyond our purview, really. Otherwise, it could have been for government, just like Ministry of Finance came to help the health sector and some other areas of intervention. CBN, probably that could have been done the more than what we have. Thank you.
Thank you, Femi. A bit of cherry news there for the oil and gas sector. The next question has been directed at you, Dr. Jude. It's pretty long, and try to abridge it as much as possible so I can go to the meat of the question. It's from Adeola Adefuye. Dr. Jude, taking a critical look at the wording of the stimulus bill. The bill actually proposes an arrangement whereby Nigerian companies and business owners are entitled to a rebate on the amount which ought to be remitted as pay to the extent of 50% of the amount remitted to the tax authorities as CIT, not the other way around. Doctor, can we also say that this bill would not apply to companies that have been exempted from registration under Section 54 to 56 of CAMA? Also, Doc, it appears the bill allows room for mischievous employers to put employees on unpaid leave and still enjoy the tax reliefs. Dr. Jude, what say you?
Okay, thank you, Adiola Adefuye. I think the question is three-pronged, right? Three-pronged question. First, he was trying to say that that the bill actually stipulated that 50% of the tax to be remitted to tax authorities should be deducted, should be kept, if I understand him well, by the companies. And he also uses the words business owners. But if you read the condition first, you have to understand the condition to enjoy this. It's not just being a business owner, you have to be a registered company under CAMA. And I have explained previously that being a registered company in this sense, we understand there's no problem with respect to registration under Part A. But we do not know whether this covers company registered under Part B business names, like partnership, law firms, and all that. Now, for you to say, for Adefuye to say that they should keep 50% of tax payable of tax remittable, remember that companies do not remit the entire, it's just a smaller percentage of the income earned by these taxpayers that are being remitted. to tax authorities monthly. Every taxpayer is expected at the end of the year to file its returns and you are filing your returns, you pay your tax on your worldwide earnings. If you're earning income from other areas, you have to file it. Then at that point in time, you will know what is the taxable amount or taxable income you've made. The stimulus bill uses the word tax payable. That's what you use, tax payable. 50% of the tax payable. So how do you determine the tax payable when the company only deducts? The companies are only withholding agents. They are withholding agents for the purpose of tax compliance reasons. They don't deduct everything. So before you determine your tax payable according to the stimulus bill, you have to wait till the end of the year. You file your income tax. Perhaps there are people who earn income from other places. Now, my question is that for the bill to attach that rebate to the tax payable by taxpayers, there's a problem, because the companies are not people who pay the tax. They are only agents. They pay their own corporate income tax. So what the bill ought to have said, if you want to tie it to taxpayer, you said, okay, whatever is the tax payable by each taxpayer, maybe from the income you pay the tax in the person, at the end of the day, we're going to give you 50% credit, tax credit. That will help the company more. Then on the other hand, I think he asked question about 50, whether or not companies registrable exempted under section 54 to 56 of the CAMA, whether they will participate. Companies, section 54 to 56, section 54 actually says that no foreign company should participate or do business in Nigeria until you're registered as a Nigerian company. So if you're a big company, you can come here and register a subsidiary and do business through that. But there are also exemption procedures where these companies could be granted exemption to operate in Nigeria. So now the question is, if the company is only granted the exemption to operate in Nigeria, or if the company also has a subsidiary. If it has a subsidiary, there's no question about it. If it is granted exemption to do business, and maybe it is granted exemption for to do business for 3-5 years, I don't see the reason why it shouldn't participate. By the way, even the Company Income Tax Act itself does not care whether or not you're registered or not before you pay your tax. If you look at section 13 of the CITA, even the Finance Act has gone further to amend it that companies like digital services, even if you don't have permanent establishment in Nigeria, you still pay tax if you supply some digital stuff to companies in Nigeria here. So now, the question, I think the last question was whether the bill allows room for mischievous employers to put employees on paid leave. If you put employees on paid leave, then you are defeating the sole purpose of the stimulus bill. Because the essence of the stimulus bill is to keep workers, keep employees at work and get them paid. When you put somebody on unpaid leave, then you are sabotaging, you are not helping the object of the statute. I don't think they will participate. I don't think that will work. That's my humble view.
Thank you. Thank you very much, Dr. Jude.
Mr. Simeon, there's a question I saw from my very good friend, Professor Abiola Sani.
Yes. Okay. He asked about 2 questions. One of them has been answered already. Because of time. Hang on, Dr. Jude. Hang on, please. I see a question from Sani. Let me just track it down. Yes. Do you consider the provisions of the bill adequate? Dr. Jude, you've already addressed that. So I'll just ask you to take just 1 minute, because we are pressed for time already. Just 1 minute, Dr. Jude. Please fit your response to 1 minute. The question is, what are your thoughts on how the tax authorities make new monies for possible inclusion in the bill? 1 minute, please, Dr. Jude. 1 minute.
I think the main area, with all due respect anyway, there's one issue Sani raised. Sani said that what we're discussing has nothing to do with tax, except the stimulus bill.
Dr. Jude, hang on. That is a comment he made. He's entitled to make his comments. His questions are at the end. Just focus on that. What are the thoughts? What are your thoughts on how the tax authorities could make new monies for possible inclusion in the bill? This conversation will continue after this webinar. You can always respond to him subsequently. But please just address what are your thoughts on how the tax authorities could make new monies for possible inclusion in the bill. In 1 minute, please. Thank you.
Well, in respect to questions of how the tax authorities could make new money from money bags and companies expressing boom for possible inclusion, I do not think you're not going to go and create a different tax rate. For money bags, the 6th schedule of the Personal Income Tax Act is there on the rate that is applied. Whether you're a multi-billionaire, it doesn't matter, you apply the rate. And again, for companies experiencing boom, well, I think it is difficult to say that any company is experiencing boom now, globally. It's very, very difficult to say that. I'm not aware of any company experiencing boom now. But regardless, I think the stimulus bill will just be applied. No exemption. So you are not going to discriminate against any business, perhaps even though I don't believe there's any company experiencing boom now. That's what I would say. But I thank my friend Professor Biola Sani for having the time to participate. He's my very good friend and a senior professor. And,
thank you.
Someone I look up to.
Thank you, Jude. Please leave your questions in the Q&A option of your Zoom app. We will crave the indulgence of our panelists to take time out to respond to them, one after the other. There you have it. The panelists have set it all. Government has done things already in terms of trying to cushion the hardship of COVID-19, but there's always room for improvement. It's about that time when we say our thank yous. We want to thank our panelists from the bottom of our hearts for taking our time to share their thoughts on the many issues that have been addressed today. We thank you most profusely for joining us in this conversation. Professor Omeri, thank you very much.
Thank you.
Femi, thank you for joining us.
You're welcome.
Funke, we've enjoyed your contributions tremendously. And Dr. Jude, of course, we thank you for being part of this session.
Thank you.
We also want to thank all our attendees for sacrificing their other activities to be with us today. We thank you most profusely. Next, we'd like to thank our technical guys in the IT department for doing such a great job and making this session possible. As we navigate and scale through this pandemic, please stay well and stay safe. We hope to see you again soon. Have a pleasant day ahead. Thank you all.